Hey, what's going on, guys? Today we're going to be talking about the new ARK ETF that just launched today and what lies into it, where you guys can get it, and how I think about it in the future. So let's get straight into it. Okay, so the description says that the ARK Space Exploration and Innovation ETF investment objective is long-term growth of capital. ARKX is an actively managed exchange-traded fund that will invest under normal circumstances primarily at the 80% of its assets in domestic and foreign equity securities of companies that are engaged in the fund's investment theme of space exploration and innovation. The advisor defines space exploration as leading and enabling or benefiting from technology enabling products and or services that occur beyond the surface of Earth. So in short terms, this ETF is basically 80% into space exploration, and it was created as an ETF for the long-term growth of capital, which is basically saying it's a long-term investment. And what we could see in this is that, well, first, obviously, it's an ETF, so there's a bunch of stocks in it, and so an ETF is basically, say you have a basket or a box, and you put one stock and another stock and another stock, which count to a percentage of that ETF. Like, for example, in the ARK Innovation ETF, there is, I believe, 10% of Tesla into it, and Square is the second biggest holder in that ETF. But yeah, this is basically a long-term type of investment for if you want to invest in space exploration. But now let's get into the holdings that it has. So at the number one spot with 8.61% weight, which is how much is in the ETF, is Trimble. And the second is 3D printing ETF. There's JD.com. There is Boeing is in here. Nvidia. We have Amazon is in here. Google. We have a lot of other companies, Alibaba, and actually Netflix is in here too, and Workhorse, which actually lost its USPS deal just in the last few weeks. So just looking at these type of stocks that are in here, we see that Trimble is the number one holding, and it's a very big infrastructure type of stock, which is doing pretty well right now because this stock is being supported or the infrastructure is being supported by the President Biden, and he's trying to push out a fourth stimulus bill for the infrastructure. And then we see that there's other companies like Nvidia, Boeing, Amazon, Google, Netflix, Alibaba. Those stocks are known to be some growth stocks. Now, Kathy Wood loves to put a lot of growth stocks into her ETFs, as we see in all of the other ETFs. She has stuff like Square. I know, yeah, I talked about this, Tesla, Zillow, Zoom. She has a lot of tech and growth stocks. Now, the reason that these growth stocks are in this space exploration ETF is because these stocks are supposed to be the little short-term type of boosters to this ETF. So when those growth stocks are growing a lot, it's not accounting to more than 5% of the ETF. So that means that the ETF will grow a little bit in the short term, which they kind of want to balance the short term and long term investment into one. But yeah, looking at the type of stocks in this, we see that I believe only like 10% of these stocks are actual space type of exploration stocks. But maybe in the next like 20 years or 25 years, we could see that a lot of these stocks could become space exploration type of companies and industry and go into that industry. And so that means that since this is a long term type of investment, this is bringing the risk factor up because we don't really know what will happen in the next 20 years. Will these stocks get into the space industry or will they stay where they are right now? So that's a big factor to why you might want to or not want to invest into this ETF. And so, yeah, if we also look into the holdings into this, there are a lot of stocks that don't have high PE ratios, which means that they won't be growing as much. And those are basically mainly in the growth stocks that I was talking about, which are already very, very developed and are still looking to have a good growth. But on the other hand, there are some that have a good PE ratio for the future, at least. And that's why this is basically a very, very early investment for the long term. And so, yeah, my thoughts on this investment is that it's we still need to see what happens in the next like 20 years or so. And that's kind of when this is supposed to grow until. And it's a very, very good long term investment, in my opinion, that it would be a very, very good idea to invest in if you want to get into the space industry, because right now we don't really have any space type of stocks. For example, if you wanted to get into like SpaceX, just a single stock, instead of that, which because it's not public yet, you could invest in something like the ARKX. Well, yeah, that's gonna wrap it up for this one. I think this ETF looks kind of jumbled up and very good for the future. And let me know what you guys want next, and I'll catch you then.